This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Friday, July 17, 2026, and this is the New York session. Now, let's get into it. We are deep in a liquidity trap. Bitcoin is holding steady at $63,934, but the market beneath it is hollow. Fear is at 14 out of 100, the lowest readings we've seen since the start of the year, and institutional futures demand has collapsed to 2024 lows. The question on every desk right now isn't whether price will move, it's whether there's enough capital left to move it meaningfully. And then there's PayPay. That $1 billion NASDAQ IPO attempt is sitting right next to a Senate housing bill that bans CBDC, creating a regulatory paradox that is freezing risk appetite to a standstill. Before we dissect the breakdown, let's look at the schedule. Today is Friday, July 17, 2026. The primary event on the calendar is monthly options expiration, or monthly OPEX. This is the mechanism that determines whether the current consolidation at $63,800 resolves into a breakout or a flush. We also have the ongoing legal proceedings surrounding the PayPay IPO and the Senate's CBDC ban vote. These aren't just background noise. They are the structural anchors defining our liquidity environment for the week ahead.
Right, so we have the mechanical pressure of monthly OPEX colliding with the fundamental uncertainty of a $1.1 billion IPO and a congressional ban. The market isn't reacting to new information, it's reacting to the absence of clarity. The Fear and Greed Index at 14 out of 100 tells us retail is exhausted, but the real story is the VIX at 15.67. Traditional markets are sleeping. Crypto is wide awake in terror. That gap is where the risk lives.
Let's start with the headline gravity. CoinDesk reports that PayPay, 40% owner of Binance Japan, is seeking up to $1.1 billion in a NASDAQ IPO. Simultaneously, CoinDesk notes the U.S. Senate housing bill includes a CBDC ban. Let's talk about the PayPay move first. What does this do to the flow landscape?
It's a classic liquidity bridge, but the timing is brutal. We're seeing Bitcoin futures demand fall to 2024 lows. If PayPay lists on NASDAQ, it forces strict SEC compliance on Binance Japan's operations. My on-chain data shows exchange reserves are stabilizing, but that's because the selling pressure from miners like Core Scientific, who turned lower after disappointing Q4 results, is absorbing the available liquidity. The $1.1 billion isn't fresh capital entering the ecosystem. It's traditional finance capital trying to secure a seat at a table that's currently on fire. Until that IPO prices successfully, any inflow data from Japanese exchanges looks suspicious. It's not accumulation, it's preparation for regulatory scrutiny.
And that scrutiny is the risk vector everyone is ignoring. You're talking about compliance, CIPHER, but I'm looking at the VIX at 15.67. Traditional vol is near historic lows while crypto fear is at 14 out of 100. That's a correlation break. If PayPay's IPO faces even minor delays or underwriters pull back, the legitimacy premium collapses instantly. We saw Iranian crypto outflows spike 700% after recent geopolitical strikes. That's not smart money. That's distressed capital hiding in the pipes. When you combine a fragile IPO narrative with distorted volume from sanctioned entities, you don't get stability. You get a volatility bomb waiting for a single negative headline. The market is pricing in a soft landing, but the plumbing is leaking.
So the institutional side is hesitant. Grid, let's look at the charts. Bitcoin is at $63,934, up 0.02%. It looks flat, but the volume is thin. What is the technical structure telling us about this flatness?
Flat is a lie. The structure is brittle. Bitcoin is anchoring at $63,934, but without futures leverage, that anchor has no weight. Look at Ethereum. It's at $1,838.50, down 1.55%. That underperformance relative to Bitcoin confirms a dominance shift. Bitcoin dominance is sitting at 56.43%. Capital is fleeing high beta alts like NEAR, which crashed 3.83% and parking in Bitcoin purely as a defensive vessel. The support level at $63,000 is currently being tested, but there's no buy-side depth behind it. If we lose the daily close below 63,000, we aren't looking at a gentle dip, we're looking at unbuffered price discovery into the next liquidity pocket. It's a distribution trap dressed up as consolidation.
I agree with the fragility grid, but let's look at the psychology driving this. The fear and greed index is at 14 out of 100. The 7-day average is 12. Panic is normalized. It's not acute anymore, it's chronic. And that's dangerous because it means retail has stopped reacting to bad news. They've checked out. Meanwhile, Cardano is up 3.15% to 16 cents and 57 mils. Everyone is cheering that green candle, but it's a mirage. In a 14 out of 100 fear environment, isolated gains in low-cap alts are usually liquidity illusions, washouts designed to bait late buyers before the broader market dumps. The sentiment doesn't support a reversal. It supports a slow bleed.
That's the synthesis right there. Pulse, you're saying the sentiment is numb. Grid, you're saying the technicals are brittle. CIPHER, you're saying the flows are stale. And SPECTER, you're saying the external risk is mispriced. The result is this paralysis at $63,934. The pay IPO is supposed to be the catalyst, but until we see actual spot buying volume exceed $66 billion, which is where we are today, the market is just churning. We're waiting for the OPEX expiry to decide if the floor holds or cracks.
Let's drill down into the assets. First, Bitcoin, $63,934, 0.02% change. Grid, you mentioned support at 63,000. If we hold, what's the ceiling? And CIPHER, where is the actual buying coming from?
If we hold 63,000, the immediate resistance is the 24-hour high of $64,286. But honestly, trying to trade the upside right now is futile. The volume is churning. The real metric to watch is the breakdown. If we lose 63,000, the next structural support is significantly lower, likely testing the psychological $100 handle if we see a cascade. But for now, the range is tight. $62,528 was the low, and we're hovering in the upper quartile of that range. It feels safe, but it's a false sense of security because the bid wall is invisible.
The buying isn't visible because it's not retail. Retail is gone. The modest support we're seeing is likely algorithmic market-making bots defending the OPEX strike prices. But look at the secondary effect. Bitcoin dominance is up to 56.43%. This means every dollar of inflow is going into Bitcoin, draining the alt pools. I'm seeing Core Scientific's wallet activity increase. They sold post-quarter 4, but they're still moving coins. Miners are monetizing hash rates rather than holding. This adds persistent sell-side pressure. So yes, Bitcoin might hold 63,000, but it's only holding because everything else is bleeding out faster. It's a relative win, not an absolute one.
And that's the danger. Relative win implies the alternative is worse. What if the alternative becomes catastrophic? The VIX at 15.67 suggests equities are complacent. If the S&P dips tomorrow, crypto won't just drop. It will gap down because there are no futures longs to cushion the fall. The 2024 low in futures demand means there is no leverage to fuel a short squeeze. If bad news hits, say, a delay in the pay IPO pricing, we won't see a bounce. We'll see a straight line down. The risk/reward is asymmetrically weighted to the downside.
Okay, let's move to Ethereum. $1,838.65, down 1.55%. Link is down 1.58% to $8.24. This sector is clearly lagging. Grid, what's happening with Ethereum technically?
Ethereum is confirming the dominance shift. At $1,838.65, it's trading well below its 24-hour high of $1,867.66. The relative weakness against Bitcoin is the key signal. While Bitcoin held positive, Ethereum dropped. That divergence confirms that smart money is rotating out of smart contract platforms and into pure currency play. Technically, Ethereum is facing heavy resistance at its own 24-hour high. Unless we see a volume spike above 1,867, this is just a weak retracement. The support level here is tricky. it's likely testing the area around $1,800, which is where we last saw significant volume nodes in June. If that breaks, the path of least resistance is toward $1,750.
The flow data backs that up. Ethereum dominance has contracted to 9.76%. Capital is literally fleeing Ethereum for Bitcoin, but there's a nuance. Monad's CB-BTC bridge may add $5 billion in Bitcoin-backed liquidity. That's a Bitcoin-centric expansion, not an Ethereum-centric one. The infrastructure investment is bypassing Ethereum. Even though TD Securities sees NYSE tokenization as an institutional turning point, that tokenization is largely settled on chains competing with or alongside Ethereum, not necessarily boosting Ethereum gas fees or utility. So the outflow from Ethereum isn't just technical, it's fundamental. The narrative of Ethereum as the global computer is losing ground to Bitcoin as the global settlement layer.
And the sentiment reflects that loss of faith. When you compare Ethereum's minus 1.55% drop to Cardano's plus 3.15%, you're seeing a fracture in the alt market. Investors are scared of Ethereum's competition and its regulatory status. They're hiding in Cardano, which is up 3.15%, not because they love Cardano, but because it's low enough to feel cheap. But as I said earlier, in a 14 out of 100 fear climate, that 3.15% gain is a trap. It's the last gasp of speculators trying to find a winner in a losing sector. Once Bitcoin sneezes, Cardano will catch a cold harder than Ethereum did.
Let's talk about that outlier, Cardano. Cardano is at 16 cents and 57 mils, up 3.15%. Grid, you dismissed it earlier. Why is this move standing out?
Because it's statistically abnormal. The overall market cap change is minus 0.25%. Cardano is up more than 3%. In a synchronized downturn, this kind of decoupling usually precedes a sharp correction. Technically, Cardano is approaching resistance at the 24-hour high of 16 cents and 65.54 mils. Without sustaining a close above that level, this is a dead cat bounce. The volume profile doesn't support a breakout. It's a low-volume pop. I'm watching the 96 cent and 70 mil mark as immediate support. If it slips below 16 cents and 10 mils, the entire rally evaporates. It's not a reversal, it's a liquidity grab.
From a flow perspective, this is tiny. The float is relatively low, so a small amount of buy pressure can move the needle significantly. Compare that to Bitcoin's $66 billion daily volume. Cardano's volume is negligible in comparison. This isn't institutional accumulation. It's probably a few large wallets rotating profits from a previous cycle into a quiet asset. It's not a signal of sector health. It's a symptom of illiquidity. Don't mistake silence for strength.
What about Solana? $7.97, down 0.45%. Solana is often a barometer for risk-on sentiment. Here, it's barely red while Ethereum is down 1.55%. Does that matter?
Only if you're optimistic, which we shouldn't be. Solana holding near $75 while the rest of the alts bleed is a sign of relative resilience. Yes, but it's also a sign of isolation. It's not leading the charge. It's just refusing to die yet. But remember the Iranian outflow spike of 700%. That capital often flows into high-throughput chains like Solana and Tron because of speed and low cost. So part of that resilience might be distorted volume from sanctioned entities trying to move funds quickly. Don't trust the green candle on Solana without verifying the source of the volume.
Interesting point, SPECTER. So the volume on Solana might be artificial. What about XRP? $1.09. Almost flat, minus 0.17%. XLM is down 1.29%. How do you view the XRP position here?
XRP is interesting because it's been detached from the mainstream crypto narrative for years. At $1.09, it's acting as a hedge. It's not correlated strongly with Bitcoin or Ethereum right now. However, look at the headlines. U.S. authorities seek to recover $327,000 in USDT from romance fraud. That's USDT specifically. XRP's stability here suggests it's being used as a base pair for stablecoin swaps during this volatility. People aren't selling XRP, They're swapping it into USDT to sit on the sidelines. The flow is exiting risk, not exiting XRP. It's a shelter, not a growth play.
Technically, XRP at $1.09 is hovering right at a major psychological integer. The 24-hour high is $1.09.40. It's touching the ceiling. If it breaks that, the upside is limited. More importantly, look at the wider picture. BNB is down 1.09% to $567.20. Exchange tokens like BNB and XRP tend to perform poorly when exchange risk is high. With the PayPay IPO bringing renewed scrutiny to Binance's ecosystem globally, BNB's weakness is a warning shot. XRP might be quiet now, but if the regulatory hammer drops hard, it won't stay quiet for long.
Let's wrap up with the broader market context. The VIX is at 15.67. The Fear and Greed Index is at 14 out of 100. We have monthly OPEX today. Apex, tie this together. Where are we stuck?
We are stuck in a wait-and-see graveyard. The data is clear. Bitcoin is at $63,934, holding firm only because the alternative is worse. Grid has shown us that the technical structure at 63,000 is unsupported by futures leverage. CIPHER has quantified that flows are dry, with minor selling and capital raiding into Bitcoin dominance at 56.43%. Pulse has identified that sentiment is at 14 out of 100, normalized panic, not active selling. And SPECTER has warned that the VIX at 15.67 masks a severe correlation break that could explode if traditional markets wake up.
So the takeaway for our listeners is this: do not chase the green candles. Cardano's 3% gain is a liquidity trap. Solana's resilience is potentially distorted volume. Ethereum is bleeding to Bitcoin. The market is at 48 hours away from monthly options expiry, with a $1.1 billion IPO hanging in the balance. The volume is churning at $66 billion, but direction is absent. Stay liquid. Watch the OPEX expiry, and ignore the noise until the Fear and Greed Index gives us a reason to believe otherwise. This is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the after-hours session where we will see how these calls play out. Until then, trade safe.